Derrick Smith here, senior trader over at T3 Trading Group. Today I'm coming at you with a stock analysis of the biggest IPO of the year so far, Rivian, symbol RIVN. Quick disclosure here, I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Quick position disclosure on the positions I'm in currently. I do not have a position in the stock I'm about to talk about right now. I did trade it yesterday in the IPO, and I'll talk a little bit about that. Okay, so Rivian, a lot of hype around this one. IPO'd yesterday, opened up at $106.75. Let's talk about some of the information here on the IPO, and let's talk a little bit about the bull and bear case, and then we could take a look at how I traded it yesterday and any potential technical signals we're getting so far from this stock. After increasing the price range from $57 to $62 to $72 to $74, this thing actually priced at $78 per share yesterday. So the IPO price is $78 per share, and that gives it about a $66 billion market cap at the IPO price. But, and this is one of my big pet peeves on the IPO process, which I can talk about in a little bit more detail, the stock actually opened up for trading on the secondary market at $106.75, which is about a 37% premium to where it was actually priced at. So again, the IPO price, this is where the big clients of the big investment banks are able to get stock, is at $78. But when it opens up for trading on the secondary market, which is when regular people, regular investors, regular traders can actually get involved in this thing, it opens up at $106.75, which is about a 40% premium to the IPO price and gives it a market cap of over $100 billion. That makes this the most valuable U.S. car manufacturer in the United States after, you guessed it, Tesla. Rivian here is worth more than General Motors, even though they basically haven't even sold a car yet. This IPO enabled them to raise $11.9 billion, and pretty much every big player from the investment banking community was involved in this thing, particularly Goldman Sachs, Morgan Stanley, JP Morgan. So let's just talk really quick about this IPO process, because this is just such a huge pet peeve of mine. We see this happen all the time. Basically, a stock gets priced at a certain IPO price, in this case $78, and then actually opens up for trading on the secondary market at a very significant premium to that IPO price. And for me, this is just a huge pet peeve. I think it's like the ultimate example of Wall Street enabling the rich to get richer. So who actually gets stock in this thing at $78? And when CNBC and all the major financial media outlets are praising this as such a successful IPO for being up 20, 35%, whatever it is, at the end of the day yesterday, is it really that successful for regular people who actually want to come and be involved in this company because they think that there could be growth potential in this stock? They want to own it for themselves, put it in their retirement account or whatever it is? I don't think so. So basically, the IPO process with these types of IPOs, in a lot of ways, is just a scheme to enable the biggest clients of the investment banks to just make a 40% or so premium pretty much instantly overnight. And for the rest of us, we're potentially left holding the bag at much higher prices. But still, at $106.75, is this something that you want to be involved in? Well, let's take a look at a bull case, and let's take a look at a bear case for Rivian from the perspective of what I call qualitative fundamentals. Okay, so again, second most valuable U.S. car company that hasn't sold a car. That's insane, isn't it? It sounds completely nuts. The rate in which this company is burning cash is mind-blowing. I think that they lost about $2 billion or so in the first half of 2021. They expect to lose another $1.3 billion or so just this quarter, and they expect to bring in under $1 million in revenue. So we're talking about a company here that is valued with a market cap where it's trading of over $100 billion that isn't even going to be able to make $1 million in revenue in this upcoming quarter. It's just completely crazy. And for the most part, any revenue that's come in over the course of the last 12 months or so is from refundable deposits on pre-ordered trucks. So that's your bear case. And for me personally, these pre-revenue IPOs, they really kind of scare me. I've listened to for years now, as this market's gone up, a lot of comparisons that people have attempted to make between our current stock market and a lot of these crazy valuations, like Tesla as an example, now being worth over $1 trillion, basically worth worth more than the rest of the entire car industry combined. People have tried to make that a comparison to the tech bubble in the 1990s. I actually really don't agree with that. The big difference is the tech bubble in the 1990s, they didn't even have revenue, a lot of those companies. At least most of these companies nowadays, they've got real revenue coming in, they're trying to build scale, they're IPOing, and they have a potential path to profitability at some point in the future. So when I start seeing companies like this that are potentially pre-revenue, that's the first thing I see that is reminiscent of the big tech bubble in the 1990s, and it definitely makes me a little bit nervous. So that's kind of our qualitative, fundamental bear case for this recent IPO. What's the bull case? Well, the bull case is you shouldn't be valuing this as a car company. You should be valuing it as a tech company. And that's been the bull argument from Tesla basically from the beginning. And it's obviously worked out really well for them. Rivian is marketing their Rivian ecosystem, right? And that is the tech aspect of it. So we're talking about vehicle tech. We're talking about potential services revenue, future updates, the Rivian cloud ecosystem, whatever that means, plus a potential future electric charging network that they could establish around the country. So that's all the Rivian ecosystem that they're trying to push so that they can have a valuation that's more of a tech company and less of a traditional car company like a General Motors or a Ford or something like that. For me, the biggest bull argument on Rivian is the dynamic between Jeff Bezos and Elon Musk. So Amazon is a stakeholder in Rivian. They have about, I think, 22.4% is what they currently have. And Amazon has also already made orders for about 100,000 electric vans that they're going to use as part of their delivery ecosystem going forward. So, you got the backing of Amazon, you got the backing of Jeff Bezos, they also have the backing of Ford. That is a big deal. And especially when you look at the dynamic between Elon Musk right now and Jeff Bezos and everything that's going on with the space race, how they've really been butting heads over the space race. There's a lot of lawsuits that's going on there. We're actually already seeing the same thing here in this electric car space. There is a lawsuit going on right now between Tesla and Rivian that's like a trade secret lawsuit of some sort. And anyway, for me, that's actually a huge bull case. These guys are trying to think of the right term, because the only term I can think of is a rather inappropriate one that I'm probably not allowed to say. But basically, these guys are having like a measuring contest, so to speak, on who can be the richest guy in the world, who can get into space first. And because of that, I really think Amazon is going to do whatever they got to do in order to make this company as valuable as possible to compete with Tesla, because that's the name of the game right now, is to have competition between the richest men in the world. So I think that's actually a huge bull case. Amazon is probably not going to be selling their stake anytime soon, and that goes back to supply and demand, right? At the end of the day, what moves stocks, especially in this day and age, is supply and demand. So the bull case here is Amazon's got a 22+% stake. they're probably not selling. And my understanding of the IPO process, one of the reasons why that IPO range kept getting larger and why the pricing was even above the range of $78 was because there wasn't a whole ton of stock that those big investment banking clients are typically going for that they were able to actually get. So again, it's a supply and demand situation. So now the stock opens up at $106.75, which again is a pet peeve of mine because if you're a regular mom and pop investor, you can't get stock at $78. It's also a pet peeve of mine because it means that Rivian, who raised $11.9 billion from this IPO, they could have raised even more. Right? Why is the investment bank bringing this online at $78 if it's actually going to open up at $106.75? They should be giving Rivian value based on $106.75. Anyway, that's our bull and bear case. So let's turn to the technicals. I traded this IPO yesterday as it kind of came online. I just took really one simple trade in it. So first of all, where does this stock belong? Right? We just kind of did the bull and bear case. So where does this stock belong? I have no idea where this stock belongs. And I said this to the team in the afternoon meeting on the virtual trading floor yesterday. If Rivian ended the day at $150, I wouldn't have been surprised. And if Rivian ended the day at $80, $85, I wouldn't have been surprised. I have no idea where this thing actually belongs, and I don't think anybody does, because it's trading purely on this future speculation on this partnership between Amazon and electric vehicles and everything that we already discussed. So I got no idea where this thing belongs. So all we can do is actually trade the price action. They open it at 106.75. I bought stock at about 107.25 versus the opening low. The opening low here was 105.80. So I took on, I guess, $1.50 in risk or so on my initial trade. And I basically just bought off the opening low as a pure risk-reward scheme. I figured, all right, if I come in and risk $1.50 in this, I'm comfortable with that loss if the trade fails. But if this thing actually works out and they really run this thing in a big way, which we've seen that happen in many IPOs to date, and this thing runs to $140 intraday, then it's going to be a great risk-reward for me. So that was just a very simple thought process behind a very simple trade. I got my risk covered very quickly on the way up, and it gave me this very quick flash up to almost $120. So that put me about $12, $13 in the money in about 10 minutes on this trade. And I booked a bunch on the way up, and once my risk was more than covered, and I have no idea where this thing could actually run to, I just made a very simple game plan for myself. I'm going to sell a little bit of stock every $5 until I run out of stock. And I got the move to 120. I still had some stock. I let that come all the way back down. I gave back some open P&L, and I got stopped out as this thing, approached lows and triggered my game planning stop loss. And then I really emphasized to the team, even when it was coming down off highs, not to buy this thing on the way down. And that's very important when you're trading IPOs. A lot of times you're just trading with the momentum. IPO trading is also a lot about tape reading, which people who know me know that when I'm speaking to new traders, I tell them not to worry about tape reading in the beginning of their career. You should really primarily, in this modern market, focus on learning charts. But there are some instances and some circumstances where actually learning to read tape, the level 2 in conjunction with the price and sales, is really important. IPOs is one of those major times. So I like to read the tape to try to find natural buyers and natural sellers in the tape, because when this thing first opens up, there are no charts. And the tape tends to trade very pure because there aren't as many algorithmic traders that are in the tape yet, because it's such a brand new issuance. So we get this quick run up. I'm warning the traders, guys, girls, be careful on the way down. Be careful buying this IPO on the way down. I got no idea where this thing's going to end up. So I had a great initial trade. I got stopped out. New lows came in. I haven't taken a single trade in this thing since. And as you can see here, for the rest of the day, once it broke those lows, the opening price action was honestly pretty garbage for the IPO. It basically did nothing, closed at about $100 on the day. Still tremendous valuation on this company. And then here we are, day 2, had a beautiful gap up. I actually have not traded at all today. There was definitely some missed opportunities by my not being involved in it. I was a little bit nervous by the degree of the gap up, but a perfect opening technical pullback as the ADMA catches up. It built out the range, and the best possible trade today in RIVN would have been on the 10:55 minute bar when it broke out of the opening range on the day here and then gave that upside continuation. We have our first resistance level now. Our first resistance level in RIVN from the second day of trading here is $125. So it pulled back about $10 off of that first resistance level. And now as we're approaching the close here, we got about 30 minutes left in this trading session. Nice little snapback, creating a bullish consolidation. We'll see if it goes after 125 bucks. So for me right now, I have no idea where the stock belongs. I'm happy to continue to trade the price action in this as it comes together. I think that this is going to be one where really only time will tell, and how the market continues to treat Tesla is definitely going to impact how the market continues to treat this RIVN going forward. But definitely a really interesting new IPO here and a new stock that we as a team can start looking at for opportunity. All right, if you enjoyed this analysis, if you want to see more of this type of stuff, give me a like, give me a subscribe, check out the links in the description, become part of the team where you could learn to get this analysis in real time. As these IPOs are coming online, you can hear what my team and I are doing and how we're trading them. So get involved. I'll see everybody next time.